Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. First thing we're looking at here is a chart of the market. This is the Mini S&P 500 futures contract, front month in nature. Looking at the last print of 1129.50 on a pretty nice and impressively directional day, down day, I should say. And well, how do we know it was going to be a down day? Well, all you have to do is look at our indicators. These are proprietary indicators known as our intraday dynamics. And as you can see, the market did open lower, had a couple yellow bars here, and below the trend. So it opened lower, below the low of the late session of the prior day, below the trend. So that's a couple of bearish indications, yeah. But what else is going on? Well, if you look at the underpinnings of the market, you see right here, bearish, and coming on to bearish, and a nice move lower to break below this low right here just sent the market in a tailspin, in a trailing move all the way down with a loss of almost about 15 points or so. We'll call it about 16 points right now, and from around 11:45, we'll call it just 15 points or so. So it's a nice down day for the ES, and just beautiful trading opportunities have emerged in our intraday dynamics. As you can see, this of course is Friday, and Thursday, Wednesday, Tuesday, Monday. As you can see right here, we had a lower day and a retest of the underside of the trend right there, coming in right around the 1138 level, and just retesting the low of the late session of the prior day on this day. But what was it? I mean, is the market going to break above the trend, or is it just going to go lower? Well, look at the underlying indications. Of course, you see bearish, and what did the market do? Just rolled over. But what happens the day following? Well, you see a very strong positive divergence right here in the market. We actually had just a beautiful, just knew that this was just not going to hold. This was just an errant move to the downside. Looking at these indications, the trend higher there, the very strong divergence there, very strong divergence there, just knew this market was just going to blast higher, and that's exactly what it did on this day and closed near the high of the day. But going into the next day, what's going on? Well, we're retesting the highs of around 1145 to 1146. What's going on though? Strong negative divergences. This move is likely not going to hold. Did get a sell-off, did get kind of a trail higher to the upside, as most of the market participants just simply took a breather. And lo and behold, coming in on Friday, this negative divergences, the bearish indications, this double top and quadruple top, one could argue, really just showed that the market was headed lower. Now we're there. We've reached this support of this prior low right here on the 12th, and comes in right around 11:25 to 11:30, and of course that's where we're hitting as it stands on this, the 15th day of January, and heading into the Martin Luther King Jr. holiday, which the markets are closed on Monday. So how have our portfolios fared on this day? Actually, we need to take a look at the daily analysis. Now this is kind of interesting. We've got an ET sell signal. Granted, it's a high level in nature ET sell signal, but pretty impressive actually. We are remaining bullish now. Our official market timing, just one move, one day does not a trend make, but this ET, you see this elephant trunk right there, ET sell signal, beautiful in nature. Could be just another buying opportunity around 1110 to 1120. We'll wait and see how that fares out. Looking at the sentiment indices, not too much complacency right here. A little bit of fear actually in the equity per call value ratio, and one could argue a little bit of complacency there. As we've mentioned, we did expect a nice rolling over given these recent sell signals, but the market just had a little more upside potential, which it's realized now, and so we'll wait and see from a price technical perspective where the market goes. Once we break below 1110, will certainly be neutral. Around 1100 and 1110, a move below there will bring us to neutrality, in all likelihood bearishness depending on the ferocity of the move. But right now we're at 1133, trying to hold this low as mentioned from the other day. This of course is the cash market S&P, but right now holding on to about 150 to 180 points from a discretionary bias, or basis I should say, for all of you video subscribers. Hope you're taking advantage of these beautiful moves. Just holding, positioning maybe your stocks, or maybe you're trading the spiders or your mutual funds or your IRAs or what have you. And had you been following, assuming you have been following, you've made probably 600 points or so over the last 16 months in this incredible market environment. So speaking of which, how have our portfolios done? Certainly today, are they taking advantage of the directional move that we've seen today? Well, Yes, they are huge, eye-popping gains today. As you can see, our matte black, our most diversified portfolio, heavily weighted on the short side. 11 lots short in the S&P, 17 lots short in the Dow's. $100,000 portfolio, very diversified, and certainly taking advantage with a 15% gain in just one day. A lot of people would love to get 15% in a year. This, of course, is higher risk, but certainly 15% in a day for this risk speculative portfolio. The MAPDT version 4.0, very popular portfolio, up $5,600 today, and that, of course, leads to a gain of 22.4% for the portfolio today. So a nice $5,000-$6,000 gain on a $25,000 portfolio. Again, that's an HR portfolio, actually, so this is about a 10% move on the more conservative flat version 4.0. The HR version, the 25K, half the initial capital, is of course up double that and up about 25%, almost 25% on the day. And of course we have the venerable MAPDT, which overall over the last 15 days or say is actually leading the pack, coming in with a respectable 21.3% gain today as the MAPDT, again heavy on the short side. As you can see, about 9 contracts short across 3 markets as it stands right now, up over 20%. And of course the leader of the pack today is the triple threat trader HR. And of course, again, HR, high risk, high return portfolio. 28.7% is the return for today. Very impressive day, as you can see, going short in all markets, short 6 contracts, and this course is just, I believe, a $10,000 portfolio. Very aggressive portfolio, trades up to 6 lots and has all 6 of those lots on the short side. If you are interested in getting involved in one of these portfolios, it's certainly not too late to get involved in one of these portfolios. It's full automation trading. All you have to do is subscribe, follow a link in your welcome letter to open an auto trade account. The broker handles all the setup, oversight of execution, fully automated execution. Just make sure that everything runs smoothly. Very reasonable commissions, very low commissions, considering certainly what you get. And actually, we do still have currently going on right now for this month our yearly sales event, which goes on in January of every year. If you subscribe to a full year, so you're already getting the reduced specials of the quarterly packages right here in this table. And if you subscribe to 4 of those units, which is an entire year, 4 quarters, you'll save a 25% off your entire order. That is to say that you will save, essentially, you get a quarter free, 3 months of full automation trading free. And as you can see, in just one day, you can have eye-popping returns such as these. $2,870 for the Triple Threat Trader HR. The portfolio itself is $10,000. Let's see, we'll go ahead and add that to our cart. And looks like it's $1,500 for 3 months for the Triple Threat Trader HR. So in one day, you can double. You can essentially pay for 6 months of trading, full automation trading. And you subscribe to the special, you get another 3 months free. And so you're essentially paying from one day's profits. You're only going to have to pay for 1 quarter of a year. So you get an entire year of, and as you can see right here is the performance. It does have a very risky drawdown potential anyway, but the average, as you can see, is considerably less. At the average drawdown just 32%. But there you go. You can actually save today, since this is the leader of the pack today, you can save an extra 20%. Now, of course, this doesn't apply to the yearly special right there, but you can save by entering promo code video. You can save $2,300. That doesn't make much sense. Let's do this. Yearly subscription event. And there we go. That's not working either. So let's just go ahead and take the version 4.0 out of there. Actually, we're running out of time. We can just go ahead and put it in video real quick right there and apply that. And you can save 20% since it's the leader of the day on the portfolio. If you have any questions, go to the website. Chat with the support team live, and we hope you guys have a great holiday weekend, and we'll see you next week.